Good morning, everybody. Hey, welcome to Friday, May 15th, halfway through May. Hard to believe what's going on in the world today. Hey, woke up this morning, futures were going sky high. Come into the office, coming sky low. So, hey, what's going on? Dave and I will discuss that here in just a few moments. I hope you'll hang with us today during the show. And I think that we'll have some good information coming out on what is causing some of this stuff going on today. So hang tight, and I'm sure that we will have Dave here on the next tick.
5.7 light FM. Hi there and hello, and I'm glad you're here this morning. It's 8:42 now, 18 before 9. We're going to check in and see what's going on Wall Street with the assistance of the pro, Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. We start out with a government report that, when we missed the mark, we missed the mark by a wide margin on retail sales, don't we?
Yeah, we really did. Retail sales were expected to drop. They're expected to drop 12.1%. And in essence, they dropped 16.4%. That was a big miss. They did revise March up a little bit from the drop it had, but not enough to account for this big miss. And we've seen the futures start to drop even more when this news came out.
Yeah, I kind of assumed that. I didn't know what the expectations were, but I looked at the number when I saw it come across my ticker. 16.4% drop in retail sales last month. You kind of figure, a lot of that is cars and whatnot. The price of gas was down, so some of that was explicable. No, you exclude cars and gasoline, and we still were down by 16.2%. And that's an even bigger miss than the overall number, isn't it?
Yes, sir. That was a huge miss. That's almost double what was expected. I mean, it's crazy that we're that far off. Actually, it may have been more than double because I think the consensus estimate was to be down 8.2% for retail, not including auto. And you said it's 16 point what?
16.2, not including automotive and energy. Yeah.
Crazy, isn't it? I mean, that's a huge miss. When we're talking about retail sales. And I saw another article that said that 10% of retail sales may never come back.
That's the biggest scare that I've got, that now we're hearing those cracks in the armor, that V-shaped recovery that we were hoping for and, almost assuming would happen back in March, doesn't look like it's going to happen necessarily that fast. It's going to be a slog out of this mess, isn't it?
Yes, sir. It is. It's, like Paulson said on Wednesday, the V recovery, we can pretty much kiss that goodbye. We're going to be in a U-shaped recovery, means we're going to stay at this bottom for a while. The question is how big is that U going to be? Is it going to be a big salad bowl kind of U, where it stretches out forever? Or is it going to be a cereal bowl U? So that's kind of where we're at right now.
Exactly. The other side of the fence that I'm at least showing some hope for in my eternal optimism is the U still has a straight upward trajectory on the other side of it. My fear would be that we have another redo of the way we came out of the 08-09 drop, and that took 5 years to get back to zero again.
Yeah, that was, you're right. That was a devastating deal. And hopefully this one's not going to have that kind of impact. And hopefully there'll be enough pent up demand that once the freedoms is restored to our country, that you'll see people back out spending money.
Absolutely. Like I said, there are nightmares, there are bad dreams. I can live with a bad dream. The nightmare would be a really, really slow recovery out of this. We were mentioning before we went on the air, Phillip, that the futures kind of took a dump right around 6 a.m. A couple of reasons came out of that. Number one, China released their manufacturing figures, and their factory output was up big time in April, which partially gave rise to worries about a second coronavirus wave in China. And then just to make matters more interesting, our government overnight announced, what the heck? Everything's going so doggone well. Let's clamp down on Huawei again, the big Chinese cell phone supplier, and refuse to sell them semiconductors out of our country, which is going to do nothing but make trade more interesting with China, isn't it?
It is. It looks like the trade spat is back on again with that, with that stoppage of the chip shipments going into China. And so obviously, if the United States is doing one thing, China's going to retaliate, and they have within their system a thing that they're basically isolated several companies now that will now be under more intense scrutiny. They're I think they call them unreliable importers, and that's going to be Qualcomm, Cisco, and Apple. All now will go under more examination and may not be allowed to bring their stuff into the country. And then they've already flat said they're not going to buy anything else from Boeing.
Mighty nice to have a trade war flare back up right in the middle of a time that we really need every single bit of energy we can get, right?
You're absolutely right, Dave, and that's a good point. Is that, I mean, we're already focused enough on the hope of this fixing this coronavirus, and now we've got this whole deal with China raising its ugly head again, and it's just one more thing that folks are going to have to keep an eye on.
Now, like I said, we need it like another hole in the head right now. That's contributed to a whole bunch of stock sidelines. Apple suddenly drops like 2% in pre-market trading. Foxconn, the big supplier that manufactures a lot of Apple stuff, 90% profit drop in the last quarter. It's just we got absolutely no good news to share this morning. And then another thing came across my ticker. Whole bunch of manufacturers in the allied health field, their stock trading has been halted because the SEC is going to court suing them for claims on testing procedures for the coronavirus, making claims on their reports that they couldn't back up at with objective criteria. There really isn't a whole lot of good news to be had this morning, is there?
No, there's not. Let me add one more bad thing for you.
Gosh, that's what I need.
Yeah, Germany. Reported basically their first quarter GDP, and it was a negative 2.2%, the worst in a decade for them.
Oh, geez. If you want worst in a decade, the retail sales qualify as the worst in history. The only good news I can throw out in the whole bunch is the Empire State Business Index came out. Last month, it was an all-time record low, 78.2. It improved to a minus 48.5 this month, which means it's still Armageddon, but it just doesn't feel as bad as 78.2 down does. So, I mean, not as bad a rotten news as we expected is always a positive. So I'm kind of banging my head against a wall. Any companies with any good news out today?
Let's see what we can find, Dave. It was hard to kind of find anything. Most everything is misses. As a matter of fact, let's start off with retail, right? VF Corporation, which is the manufacturer, the home company of North Face apparel and Van shoes. And so they came at 10 cents a share. That was 4 cents less than expected. Obviously, revenue missed the forecast. They're just really having issues there. They intend to pay their dividend though, which is, I guess, a good thing. But they're trading down this morning 4.4%.
Even with keeping their dividend going.
Even with keeping their dividend going. So think of what it would be like if they didn't.
I was going to say, investors are crabby these days, aren't they?
They are. Hey, a piece of good news doesn't have anything to do with earnings, but this is some good news. Taiwan Semiconductor is going to build a factory in Arizona. It's going to cost they're going to spend $12 billion on a factory. Obviously, it's going to take more than just a year or two to get going. It won't be done until and start production until 2024. But hey, that's jobs. That's an economic impact for Arizona, which is a good thing.
And some semiconductor manufacturing being done in this country is kind of a nice change too, because Lord knows we got enough difficulties with China. If we ever honk off Samsung, we aren't going to be able to buy a chip to save our neck.
That's right. So it is a good sign to have some manufacturing coming back to the United States. Applied Materials came in. They missed by 5 cents a share, and so they're another one of the semiconductor manufacturers. The revenue was short of expectations, so they are. Let's see if I can pull up the right number here. Some things just don't work real well.
See what happens when they wax
slow
Cisco?
Computer day. Slow
You're
computer day.
I got you.
So Applied Materials down 2.8% today.
All righty. Resetting the table for the morning, we kind of turned a corner yesterday. You and I were not optimistic to start the day, but we went up at the end of the day. Dow was up by 377 points. That's 1.6% up. NASDAQ was up by the better part of a full percent, up 80, and the Standard & Poor's was up by over 1%, up 32.5 yesterday. If it hadn't been for the overnight, we probably wouldn't feel too bad about the morning, but you can tell by the lousy humor you and I are in this morning, it's not good news. 45 minutes early, where are we going, Phillip?
No, it's not. It is all red, and that red occurred at about 6:30 this morning because, man, things were going up and away when I woke up this morning. But 6:30, those trade announcements started to make the news, and we saw a flop. So now we got the Dow down almost 0.9% of a percent. That's $201. Same S&P 500 is down almost 1% now, $27. NASDAQ's the biggest loser today right now, down 1.4%. That's $128, Dave. So we're going to be to the red, and not so sure that we'll see a bounce today, given that we've got the trade stuff happening. Of course, because of the lowness and the downturn of the stock market, we're seeing everything up, everything else kind of buoy up. So we got silver, you'll like this, up 4.75% today, up to $16.92 an ounce. Gold's up 0.75% to $1,754 an ounce. And crude oil, man, back up way over 25. It's up 3.8% this morning to $28.64 a barrel.
That's a pretty big change. That's out of the trading range we've seen for the last week or two, isn't it?
Yeah, heading back up towards 30.
Absolutely. Overseas markets, basically, they didn't know what was going on when they closed the markets over in the Asian rim, so they generally were up overnight last night. European markets still are inching up by about 0.5% in England and Germany, 45 minutes before we actually start opening up. I did notice, Phillip, that the federal bonds are going down. Over a $7 trillion balance sheet at the Fed. 10-year Treasury notes are now at 0.59% on my ticker. Can you believe that number?
Man, it's really fallen. I did see somewhere where the first $1 billion in bonds were sold by Bank of America specifically for the pandemic to cover some of those costs.
Wow, ain't going to make any money in bonds right now because the interest rates are heading towards zero and might go negative for all we know. Somebody need help finding a way to actually preserve a retirement account. Takes an expert, Phillip. How do I find that expert in you in order to get a look at my portfolio?
Dave, folks can give us a call just schedule a 15-minute phone consultation to ask your questions and see if you're heading in the right direction. To do that, just give us a call, 863-382-0037. That's 863-382-0037. Follow us on Facebook and Statler Financial Services, where we repost this every day. So if you miss us on the radio, you can catch us on Facebook. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday mornings on News Talk 730 a.m.
Valuable information in depth every weekend over on News Talk 730 and back here again on Monday morning on Light FM. Phillip, thank you. I appreciate it. You have a good weekend, okay?
All right, buddy. You too.
Thank you much. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, and as we wrap up the week, I want to let you know that we are thankful for you for joining us every day. I appreciate it so much. A reminder, we're here to serve you. If there's anything that we can do, 15-minute phone consultation to make sure you're headed in the right direction. It's that simple. Call us, schedule it. You can go to our website, schedule a call there. Give us a call, 863-382-0037. Visit our website, statlerfinancial.com. Have a great weekend. I look forward to speaking to you again on Monday.